everybody, and welcome to another segment of the Everyday Pro Investor Weekly Market Recap. You got Brian and Evan here. Finally got Evan back. We're happy to have him after a few weeks off. So we'll go ahead and get started, talk about the markets last week. So overall, good week. We were up for the S&P. I think it was about 1.25%, even after a little sell-off on Friday. Overall, wasn't a lot of news, but on Thursday night, we found out that President Trump had tested positive for the COVID-19 virus, and that sent the markets lower. Evan, what were your reactions to that news?
Yeah, I mean, you hear Trump kind of downplay the virus quite a bit, so to me, it kind of makes sense that he actually ended up getting the virus, and hopefully he recovers quickly and safely. And if we do hear that he recovers pretty quickly and has a healthy full recovery, then I think the market could trade up on that news as well. Looks like the futures are up a little bit tonight, which is Sunday night heading into this week, so that's positive. I don't know, the market sold off a little bit on the news, but not anything crazy. So I don't think it would continue to sell off unless, obviously, the worst case scenario could play out, which hopefully that's not the case.
Yeah, exactly. Hopefully that's not the case. We do obviously wish the president best luck in recovering, including the first lady. Good to hear that Vice President or former Vice President Joe Biden doesn't have it from the debate, and current Vice President Mike Pence doesn't have it either. So that is good news there. I think that, like you mentioned, as we get positive news about President Trump's condition, the market could potentially trade higher. I think that's where the futures were up after the latest news out of the doctors there at Walter Reed Hospital. So I think that one thing that's really could potentially send the market lower is, I think, the stimulus talks, right? We've got Pelosi and Mnuchin talking still. Nothing's been reached. Sounds like the two sides are getting closer to putting a deal together. Maybe this virus infecting the president could help speed things along. If we don't end up getting that stimulus deal, though, I really think that that's going to end up sending the market quite a bit lower, maybe 4 to 5% from where we're at here. But also in reverse, if we do get stimulus and it seems to be an overall positive for the consumer, I think you're going to see some cyclical names probably pop on that news, the overall market pop on that news. What are you looking at, though, Evan? Are you assessing it the same way I am, or are you seeing something different about the stimulus deal?
No, I would agree. And I think we'll get it. I was going to ask you what your thoughts are in terms of if we'll get it or not. But I agree, and I was just sitting here thinking about, I got out of a lot of the tech names that I was in, and in terms of the stimulus, I'm just trying to think about the companies that would possibly benefit and trade higher, relatively speaking, to the rest of the market. So basically what I'm getting at is, do you make a trade based on, for the market, the overall market of some kind, could be the SPY, just for the positive news, or do you look at individual names?
I mean, I personally have been trying to avoid the market overall unless I'm looking to put on some sort of hedge. Like we had a 329 SPY put that we had that expired Friday. It was it would have ended up expiring worthless. We sold out on Friday, getting a little bit of our premium back. But otherwise, I'm trying to stay into individual names. So, I mean, could you see the market pop? Absolutely. I think one interesting thing to note on Thursday is that we basically bumped up against those pre-COVID highs where we had broke out from just a few months ago and then traded below. And we actually bounced like almost to the penny rate off of that level. And I think that that's a pretty strong indicator that the overall market is not going back to those highs that were just set for a little while. So I want to be in individual names at this point. I would look at some of the consumer-driven names. I really like Lululemon still. We played that a few weeks ago through some options. It's had a nice move up since then. I still think, though, it traded as high as $400. I think it's traded about $320 right now. that would be a name that I look to play through options, of course, looking for a stimulus deal if I was going to do it, because it's so consumer focused. I think you could also look at potentially some of the industrials, maybe some stuff with automotive angle a little bit, because automotive's really strong right now. But some of the stocks haven't performed nearly as well as the actual industry itself. So I would look at individual names if I was going to play the stimulus. Personally, right now, I'm looking to I've been selling a lot of names, even some of the names that I like still, like a Qualcomm, just taking some profits. And really, I'm just raising cash because I think volatility is going to be there for the next few months, definitely the next few weeks, if not the next few months. And I think when we get some pullbacks, I want to enter into some of the same names even. I could enter into a Qualcomm again. Again, I really like that name, but it doesn't hurt to take profits. And then let's say I don't get back into Qualcomm, I'm more than happy to go find other tech plays. There's a lot of good plays out there right now. And then I also want to have some cyclical exposure. So we sold out of some longer dated calls we had on like an MGM and stuff. If we get those casinos pulling back, if we get some travel names pulling back, I really would look to enter into those names too. I think this is a good time to get into the cyclical names.
Excellent. Moving into our second segment, I want to give a Starbucks update real quick. So I ended up putting on the 86.90, which would be the October 9th call spread for about $1.10. That was on Monday. Sold it pretty quick. Turnaround for Thursday, which was for $1.60, so nice profit there. So, Brian, if we see Starbucks pull back, what would you look to do here?
Yeah, I think right now Starbucks is in a really, really well-defined trading range, like 82 to 90 is the trading range. If I see it get back towards 82, you got to look for earnings and potential catalyst that could send it lower or higher. But again, if you play it through options, which I think is the right way to play it here, then you're going to limit your risk, right? But if it gets back to like around $82, $83, I'm going to go look probably to buy that 85, 86 call. Again, go out a couple weeks and let that thing ride up to 88, 89, 90, somewhere in there, and then take my profits and potentially watch it sell back off. I don't know what's going to make it break out above 90 unless the next earnings comes out and is really strong. But for the time being, that's how I would play Starbucks. If it was to break down below 82, I don't know where I would look to enter the name, but I think it's a stock you could potentially get long. My guess would be somewhere in the mid-70s would be a good area to get long the name, and then probably go and sell calls against it, because once it breaks below that 82 level, let's say you got it at 75, 82 is going to become resistance. So you could go out a couple weeks and probably sell the 80 or 82 call against the name at that point in time. So that's kind of how I'd look to play this over the next few weeks.
And then we had Salesforce. It traded up to 254 and bounced, so it seems to be the resistance level. It's still well above its trend line. And if the stimulus does get passed and everything does go higher, is this a name that we would look to play as an individual name?
Yeah, I mean, I really like Salesforce. We've talked about it a lot. Obviously, we've made some pretty good money in it. Evan, I know you're still long the stock,
Yes.
Correct? Yeah, so obviously, I know you got in probably around 185, 190, so you're very profitable in this name, a great trade for you. I've made money in options on it, and I personally think it's going lower right now. Like you mentioned, 254 is a resistance level right now. I think it's gonna head lower after it bounced off of that, mainly because it's still really high above its trend line. It is still on trend, which is good. A lot of tech names broke down. Salesforce has had relative strength compared to other tech names. So the problem is now with it being so far above trend, I think it could come back. And so on Friday, I actually went out and I wanted to put on a put spread, but I actually wanted to play the name moving lower in a really unique way. So I actually bought the 242.50 puts that expire next week, and I sold the 240 puts against it, making that spread there. And then I actually went and sold the 232.50 puts and those are going to be naked. So if it goes below 232.50, I'm going to actually have to own the stock. Now, the reason I put it on this way is that I would be more than happy to buy the stock at 232.50. The reason I chose that level is, one, the previous up breakdown here just about a week ago, that's kind of where it bottomed out at. Two, it's where the 50-day moving average is at like 228 right now. So 232.50 is not much above it. I could see the 50-day being support. Also, when the stock broke out on earnings a month and a half ago, let's call it, it broke out from just under 220. So I think you could maybe get back to 220, which would be a few percentage points, obviously below 232.50, but not that many. And I think that it's a good entry point, and then I could go sell calls against it. So by putting that trade on, by buying the 242.50 and selling the 240 and 232.50 puts, I actually collected about 20 cents, and you can still go put this trade on, actually, depending on how it opens Monday, for about the same value. So I'm actually collecting money to put this trade on. If the stock moves through my put spread, I'll go ahead and sell that position, and then I'll keep the 232.50, knowing that if it keeps moving lower, that's all right. I'm going to end up owning the stock there. So a unique way to play it, you got to have the capital to do it, and you've got to be willing to obviously buy the stock at 232.50, but that's the way I want to play it, because I do want to be long this name, long term. I don't know if the stimulus helps it, but long term, this is a great name to own, and I want to get in it if I can get it at the right level.
Excellent. And then moving on to our last segment, I'm going to let you go ahead and take these, as you covered these last week. So if you want to go ahead.
Yeah, absolutely not a problem. So one thing to note, I talked about volatility a lot last week. I mentioned it this week. There was a product that I mentioned, TVIXF. I said this is a product that I just previously, when I think volatility is going to be high, and I was looking at it again, completely not thinking about the fact that this product is actually potentially going to be delisted. To not get into too many of the details, but the Credit Suisse exchange traded notes, they're potentially going to be delisted. This product is not delisted yet, but probably will be. So hopefully your broker wouldn't let you trade that. I completely forgot about it. Most brokers, actually every good broker, is not letting you trade that. So that would not be a way to play volatility. So instead, what I actually did is I went and bought the UVXY, which is a slightly levered short-term volatility ETF. And I paid about $20.50 for it. I bought a bunch of shares. I'm selling calls against it at the 25 level that expired this week. I collected 60 cents or so there. So basically, if the stock does move up and I get called away, I've made 25-ish% on that volatility. My plan is, as long as I think volatility is going to be high, I'm going to keep selling calls against it as they expire. So if it doesn't get above 25, I don't get called away. No problem. I'm just going to go sell more calls against it. And really, with that, I don't have a sector for this week that I really like, so I'm just going to talk about volatility again. And I think that it's here to stay for at least a few weeks, if not a few months. And if you're not long it yet, look for it to maybe pull back again. I talked about the 25 level on the VIX. That's probably the time to enter into a product like this, or go out and buy some VIX calls. Like I mentioned previously, they are European style, so they're a little bit different than the traditional American style options. So make sure you understand what you're buying before you get into something like some VIX calls. I don't really have anything else, so we'll go ahead and wrap it up for the week. If you haven't already, go down, hit the like button, subscribe to us. Go check out our website, everydayproinvestor.com. Follow us on Twitter, Instagram, and let's go out there and let's have a great week.